It's Kyle, K Capital. It's about 8 o'clock on August 30th, Sunday. Hopefully, everyone had a fantastic weekend. So, tonight I wanted to go through a few things. First, being the overall markets. On the dashboard for our members, I kind of broke through some of the technicals in terms of the Dow. That's what we're looking at here in this chart. We have a weekly chart going back to 2009, basically the very bottom of the recession. And what you can see here is, we bounced right off of support really last week. Monday and Tuesday. The prior week, as everyone recalls, we had a pretty big drawdown, roughly, I think, 1,500 points. We basically hit a top here in terms of the market, which everyone expected coming out of QE. With the Fed rate hike pretty much a given in September or December, the markets are now adjusting. Add on top of that, commodities at all-time lows, as well as really, the turmoil in China, Greece, what have you. Across the board, there's been some really forecasting in terms of another pullback. And we had that, at the end of, like I said, 2 weeks ago, going into last week. We bounced off of support here fairly strong. So I think that's a good sign. But again, if I had to forecast the market here and I had to put a signal on it, I'd say we're neutral for the time being. We're going to have a mixed bag of both longs and shorts as the opportunities present themselves. But again, this gives you a general sense of where we're at and some context in terms of the overall market. We wanted to go a step further and look specifically at the actual small cap space where we tend to focus on. The Russell is in a similar boat in terms of pulling back with the overall market and had a nice bounce last week. We drew a trend line right here. We could see that we basically hang on the same support level that the Dow is on. The S&P and more or less the Amex, NASDAQ, all of these really had the same stories. They all pulled back over the last 2 weeks very hard. And really, they bounce off of support. So what that tells us is that we're still in like I said, a neutral looking forecast to where we're going to basically play it safe. Any type of trade we're going to do, whether that's a day trade or swing trade, is going to be smaller types of capital allocation than we typically do. So obviously, what we teach here is 5 to 10% per total portfolio to any given trade. That helps mitigate risk. So we should probably focus on a max of 5% for the next couple of days going into this week. Just to play it safe, obviously we want to, focus on maintaining our capital. We really don't want to be caught off guard like the full market was 2 weeks ago. But having that said, so let's get into some of our specific alerts. First, the shorts. So CSLT is trading right at our stop right now at 550. Again, this is a mental stop. If we look at the trend here, the whole trend for the last couple of years has been down, very bearish on this stock. And one thing that caught my eye was really this plateau or this box pattern here to where it bounced off of this $6.50 to $7 range several times and broke through 2 weeks ago. It came back up and rallied, and really I think we went short once here and got stopped out. And really once I saw that continue down with the overall market, really, it's when we went short, right around the 495 range. Again, we're right around our threshold of where we'll probably either cover or continue to wait this out as long as it stays at 550 or less. So I think right now, one thing that caught my eye is, volume really wasn't that strong in the rebound here. But if you look back to kind of the down day coming out of their earnings call, they had a significant drop. So I think if this holds 550, I think we could very easily see 4. Again, it's going to depend really on the overall market, but for the time being, we're still short here. Again, 550 is our max stop loss. It's a mental stop loss. What I mean by that is, we're not basically putting in a limit order because I'm watching this daily, so it's something that we will alert if needed when we do close. Our next short is TGTX, another one that was a typical box play and had a nice long-term head and shoulders pattern. Here being the 880 range of the left shoulder, the head at 20, and then the right shoulder at 19. And then once it collapsed here, it collapsed on very strong volume on August 25th. So that's something that I still think is going to pull back. Looking at this last week, it made higher lows, but it did so in lower volume. So I think what's going on here is it's really going to get to the point where it maxes out at this point of support, which is now resistance. And pull back. So our stop here is 13. Again, a mental stop, so we're right at that level now. I'll see how this trades tomorrow. But given the volume indications here, I think this does pull back. And again, our target right now is in the $12 range to $10. So I think it's something that if it comes to fruition, it might be a nice return for us. But let's play it by ear and see how this happens and opens up tomorrow morning. Next is look to the long side. We closed look for a day trade for 20%, which is a great trade last week. This is a low floater and had some news come out, and basically this came across my scans midday. And really what happened was, we saw this basically pop 20%. Our entry was 141. We closed at 168 for the day trade and basically left open half of the shares for the time being. And we readjusted our stop here to 1. The logic being there that in total, in the aggregate, the $1 price range would put our total loss at 5% when you take into account the 20% we already locked in. And the reason I do that is you want to let these winners play out, especially the low float stocks. Similar to VLTC and a few other stocks over the last couple of days, Ford being another one. Once these low float stocks that have basically multiples of volume trading over their float, they can rally really hard and really fast. And that's one thing that I expected last Friday for this to happen. I actually expected this to hit 2. And that's still the target. I still think that over the weekend, people probably saw this on their scans, some of the retail traders, and they're probably going to come into the market Monday and hopefully see what we saw. And then the third thing here is, the drawdown on Friday was a really low volume comparatively to the breakout. So really, I think that was profit taking. Personally, 788K shares, the average is 289. So obviously that's almost 3.5 times the average. But compared to the breakout points, it's really nothing. I think on the breakout here, we had 3.3, and on the day before, we had about 1.1 million shares traded. So it's something, again, I'm going to watch. A stop's going to be at 1, like I suggested. And that will cap our max loss at 5%, and the target's still at 2. So there's plenty of upside here. Let's see how it opens up tomorrow morning, and we can get a better sense of what we're dealing with. Moving on to JAKK, J-A-K-K. This is a long-term swing that we've been in and out of a few times. For starters, fundamentally, the stock is great. They had a nice beat in their earnings call on the 7th or the 22nd of July. And technically, I think this is something that we were stopped out of prematurely on the general market pullback, I think, last Monday. Unfortunately, it's something I had to take the loss there, given the overall uncertainty in the markets. The Dow, I think at the time, was down 600 points. So we wanted to basically cap the loss, take it at the time. But it rallied right after that, actually that day. Again, a type of situation where we just got stuck trying to cover ourselves the downside. But we re-entered the long position, I think around 944, 945, where we're basically trading at now. I think this definitely sees 10. And the reason I think that is if you look at this flag pattern, or pennant pattern, I should say, this is coiling really tight now. And I think it's only a matter of time before, the volume comes in and pushes us above 10. The initial target will be 12 for us, so that'll be a roughly 25% return. It just might take a little bit of time to play out, but I think this is a good stock. It has the fundamentals to support a breakout, which is huge. And there's no really major announcements coming out, I think, in terms of earnings. So again, it's something that I think our general target would be in this range here, the 11.50 to 12 range to start. Moving on to the new watch list, one that has been on the watch list for now, I think, 2 weeks is EMKR. We locked in 10% in this, I think, right around this breakout here back in the beginning of August. It's something that I expected much more from, but it pulled back with the overall market and is holding this midpoint of the breakout candle pretty well. What I mean by that, and I've gone through this a few times, I think, in blog posts, but basically, this area, when you have a large candle like this, represents a lot of demand. People are buying this at more or less any price here. That opens here, closes here, and they're buying all the way up. So that shows us as traders really where the demand is for this stock. And what some traders typically use is the midpoint to determine support. And as you can see, it really has held that level for the last 5 days pretty strongly. And all to calculate that, it's very simple. You would just take the high, so 719 here. You take the low, 635, and really just divide it by 2. And then from the high, subtract that number down to get the midpoint. That's all that really is. Again, it's nothing scientific. It's nothing really, strongly quantitative in nature at all. It's really just the midpoint of that large candle, and it typically tends to hold. And so what we're really looking at for tomorrow is some volume to come in and to really kind of test this level here, and we'll probably go long. I may expect a pullback when we do. So I'm going to watch it tomorrow morning just to see where it opens up. But I think it's something that, again, fundamentally, this is a really, great story in terms of what they do and what they really have been doing fundamentally in terms of their earnings. So they had a 400% EPS beat, which is very, very, very strong. Again, it's something that I think even if we went back a little bit and looked at the weekly chart to get a longer term sense of what has been going on here, they're really forming a nice base here. And really, this is another candle, if we went all the way back to September of last year, to where you can see it held this midpoint the entire way. And I think this is exactly what it's going to do here. It's going to flag and then continue up. So it might be a longer term hold for us when we do enter, which if it is, I'll allude to that in the alert. But it's something to keep an eye on. And then to that same story is EVC, which is another one that, let's get back to the daily here. So that we traded before. It's something that I think if we back out a little bit, we can see it's a nice uptrend over the last couple of 6 months to 8 months. And really, same story. It had a nice breakout here. It pulled back, which is where we went long. And then it shot all the way up. But again, with the overall weakness in the market, it couldn't break this high of 865. Pulled back to this level. It's holding, like I've suggested before, for this stock, this bottom level, this breakout candle, which tells us that there's still support here. And I think it's rallied past that point. And I think over the next couple of weeks, it should test new highs, which should be in the 865 range or $1. On an $8 stock is a nice return. So this is something I'm keeping an eye on also. And last but not least is SD. This is our only long-term investment, quote unquote, that I would say we currently own. We've been in this for a few months now, and our target is, for the time being, a break even of 113 when we average down. I think we bought in the $71 or 71 cent range. And our initial entry was 198. So we averaged down with this. And I think this is going to play off of crude. It's basically a call option on crude. Once crude, in my opinion, gets back to the $60 to $70 range, I think all of this whole entire sector itself is going to bounce. But, Sandridge, I think, has a decent asset in the Mississippi Lime. And it's something that I think now that they're starting to true up their balance sheet and kind of relieve some of the debt pressure they've had on their balance sheet for the past couple of quarters, they're starting to go through that process. And I think it's something that's going to be a good story for Sandridge in the long term. But that's all we have for tonight. Again, let's just be cautious going into tomorrow and this week. It's something that I think going into the holiday is going to be hopefully a quiet week. Hopefully a lot of traders are basically on vacation, so we shouldn't see too much volatility, knock on wood. But if you have any questions, please shoot me an email. I'm here, happy to help, and let's make some money next week with these alerts. And just stay tuned for any new alerts and the pre-market newsletter tomorrow morning. So we'll talk soon, guys. See you.